Okay, so welcome everyone. Today is the first session on option trading masterclass where you're starting your journey from zero to become a hero. Definitely don't worry, you will be a hero. And by the way, guys, quick question, okay? How many people made money today? Right? I shared the recording also. So just say yes in the comment box if you're okay. Share your figures also. Don't worry, I will not ask your profit. Okay, so Hamjit says 6,000, Arun says 4,000. Okay, I think you guys traded with four or six, seven lots, right? Okay, 1,280 change. Okay, and okay, 600. Okay, traded with one lot, sir. Starting the journey, paper trade. Okay, superb, superb, superb. I'm happy for you guys. People who did not make money, who did a paper trading, that's totally fine. Okay. Because that is how we learn. Correct. So that's very important. You need to understand the concept before getting into it, right? Into the real time market. So, what are we learning today? Okay, what are we learning today? Okay, so we are learning option trading from the basics. What we will go through with the orientation of the options. We will see what is hedging in detail today. Tomorrow we'll see speculations. Okay, because I don't want you to put too much of graph in your head. So we will go step by step. Okay, because after this, once you understand this, we're gonna get into strategies, the lot many things. Okay, so we'll go step by step. Okay, so once again, welcome everyone. Okay, what do we learn in this option trading is in options, right? Basically in equity, what do you do? In equity you make money when the market goes up, correct? How many people say yes, agree? Right, you make money when the market goes up, correct? But in option you will make money in all the direction. Yes, you heard it right. When the market goes up, you make money. When the market goes down, also you make money. And when the market goes sideways, also you make money. Correct? Sounds good? Say yes. Sounds interesting, right? Okay, so what are we going to learn in this up, down, and sideways making money market? Okay, that is options. So we are going to start from the basics of options. Okay, we will learn in depth of a little bit background of histories, like when, why, and how the option trading came into the picture, so that you know the background of it, right? So when you know the background, it's easy to go a step further, right? So you should know from where it is started. So we will start from there and we will go through till hedging today. From tomorrow, we will start speculation, handling derivatives, all that we will go buying, selling, what is called put. And also, as a perk, I'll teach you how to make break even points in options also. I like this BEP, okay? That's my favorite topic. Okay, lesson number one. Lesson number one, what are we going to learn today is basics of options. In this basic of option, many of you might know, okay, especially the beginners, okay, option trading is a quick money, right? Option trading is a quick money. Yes, it's very important to understand the fundamentals of options, right? In this session, we will start from the foundation level. Okay, we will make our foundation strong, so let's start. Let's start with the orientation. Just a little bit of background, guys. I will not bore you guys, okay? So what we will learn all about the history of the options, how they came into being, into picture, and we will try to deconstruct the uses and characteristics of the options. So the more you know about the characteristics, it's easy to play around in the real time market. And what do terms like what do the terms like underlying asset, underlying contract, right, and obligations, spot, all that we will go through in detail. So option trading, right? Interesting, right? And also we will learn what is the significance of call and put with real life example, which means the real picture we will see there in terms of getting a option chain. I'll teach you that. Don't worry. Okay. Sounds good so far? Say yes in the comment box. Okay, so option trading. Okay, option trading was started in the international market, okay, basically in Chicago, where from 1920, okay, in Chicago, basically orders are placed in the OTC, that is called over the counter, in commodity markets. Basically, what is that OTC for the beginners? Okay, people who already know, okay, uh, it might be a refreshment for you. Over the counter, if you see 19, 1992, the web series called Big Bull, right? So the scam, sorry. So if you see that web series called Scam 1992, Harshad Mehta's, you will come to know people will be screaming with the chits of papers, right? So that is how you need to go physically and make an entry, buy the stocks. That is how it was started in 1920, and basically it was started in commodities. And then it came to in 1970. Okay, trading in equity came into picture in 1970 in Chicago Board Exchange. Okay, so as you may know, okay, equity trading was introduced in US through Chicago Board in 1970. Finally, the options in currencies and bonds came into late 90s. Okay, late 70s, using the same process called OTC, over the counter. This also was happening through all this currencies and commodities also was happening through OTC. Okay, sounds good. So let's discuss about Indian stocks, right? That is what we wanted. We don't want Chicago and US. We don't want that. How many are interested in Indian stocks? So that's the reason I'm here. I understand. Okay, so option trading launched in Indian stock. It was quite late. Okay, it was late. Where is 1970 and where is 2001? Right? But still, we had equities before that. Trust me, we had. So, option trading launched in India in 2001 on 4th of June. How? Initially, there were no involvement in options, only equity was happening. But later, Stock Board of Exchange, that is SEBI and BSE, NSE, they all got together. They discussed. They said, people are buying. Okay, what if the market falls? What is the security there, right? For example, you buy the stock. Okay, you think that market will go all the time high, but you know very well market is not static. It's dynamic. Short buying can happen due to awful events. Market can fall also. So where is the security for the investors? Okay, so for them to safeguard their investment, that is where the option was introduced. And initially it was introduced in index. Okay, and that was a monthly contract, right? It was little late. And then in the 2nd of July, that is 2001, the stock options monthly contract was introduced. For example, today we traded in Jindal Steel. Okay, so that is a short-term holding, guys, and still we are in profit. Okay, so what happens is that stock option was introduced in 2nd of July. Okay, hardly a month's time. They introduced in that equity levels for equity. Okay, and then came 27th May 2016. Okay, Bank Nifty. How many people दिमाग की बत्ती जलता है सुनते ही वो बैंक निफ्टी राइट सो बैंक निफ्टी का weekly contract, okay, this is very interesting. Weekly contract was introduced in 2016 after quite long time, yes, and it was approximately on 27th May, and this was weekly. Okay, then came another important topic called Nifty. This Nifty was a game changer, guys. This Nifty was introduced on the 11th of February. So these were the key dates on Indian stocks. A quick recap on the topics we covered so far. We had covered the history, orientation of the options, and the key dates. Okay, just recapping so that you guys got the point, right? Okay, very, very important topic, hedging and speculation. How many are interested in this? Hedging and speculation. Just say yes in the comment box. So in this topic, we will cover what are the usage of options. Excuse me, guys. So in this topic, we will cover what are the usage uh, of options in hedging. Okay, very, very important topic. Please pay some attention. I'll give you some live examples also using some stocks. Okay, so that I want to spend some time on hedging so that you guys are clear while holding short term and long term in your portfolio. Make sense? So, as I said, there are two types of usage in options. Okay, that is hedging and speculations. So let's talk about the meaning of hedging. Okay, the meaning of hedging is nothing but protecting your capital. Why the hedging is done means protecting your capital due to awful events. For example, we came through a big pandemic called Corona. Okay, and sometimes you will see banking sectors due to RBI rules or RBI announcement, or for example, like companies, like the downfall of a companies or into debts or into loans. Basically people who know how to analyze a company with the fundamentals. You can understand what I'm trying to say, right? So due to awful reasons or any big news or their financial announcement, right? So that is the time the market tend to downfall, right? So in that particular time, we can save our capital by using something called hedging in options. Option act as an insurance for your portfolio. Yes, very true. Hedging acts as a insurance for your portfolio. For example, say you have a good capital sizing. It can be 10 lakhs, 20 lakhs, 1 crore, 50 lakhs, whatever. Okay, it can be big, medium, or even a small. Any size. Okay, it can be any size. It's a capital investment, and you have invested by swing trading or a short term or a long term. Maybe you have some plans, right? And you're making a good profit, or you are already in a good profit, right? You're still yet to make, but your capital is in a good profit, which means you're already in a good profit. Now there might be a situation like what I explained, like Corona or something like that. Okay, the price of the particular stock will try to downfall, correct? Or the stock market can tank. So you want to save the capital gain or to protect the current capital. To do so, the process is called hedging. So basically, option acts as an insurance. How many people got the point? So this is what I'm trying to tell you. For example, you have a car which is a worth of 30 lakhs, right? Or you have a portfolio. Yes, thank you for confirming. Okay, for example, you have a portfolio of 30 lakhs. Okay. Now, when you buy a car, by default, the showroom guys, he says, sir, you have to pay a premium of insurance of 25,000 or 30,000. So in this case, I'm taking a round figure. Okay, that's my favorite car. That is uh, Rolls. I like Rolls. Okay, so 30,000 is a premium you pay. By the way, why do you take a insurance when you buy the car? Correct? Makes sense, right? Why do you want to do that? Why do you want to do that? Correct? You should know why am I paying to that car company, right? So basically, whenever you buy a car, you go for an insurance as well. Why? Because any kind of plus or minus or if there are any incident or accident or of an expenditure, say of 5 lakh, right? God forbid, I don't want you to fall into that situation. So car is met with an accident or somebody scratched your car or any awful incident. You have an expenditure of 5 lakh, right? That 5 lakh can be covered using this insurance. So you save big there. Don't you think so? Don't you think so? You save big there. At the same time, there is a drawback also. If the insurance is not claimed, right? If the your insurance premium will go for vain, it's done and dusted. Okay, that if you don't claim, the insurance's money is gone. But insurance will give you a protection for 30 lakhs of your car. Correct? Make sense? So that is why we say that hedging acts as an insurance. So let me give you a example. Guys, you're able to understand, right? I'm trying to go slow so that you're able to catch my rhythm, right? Make sense? Just give me a minute. I'm trying to get something for you so that I can, for example, here, okay, for example, here, you have say a portfolio of 1 crore, okay, portfolio of 1 CR. It can be 10 lakh or 20 lakh or anything as such, right? Now, from that 1 crore, your portfolio is reached to 1.2, which means 20 lakh is your profit, correct? Now, you want to, that's your profit, right? Now you want to safeguard the 20 lakhs but still want to be on the trade, right? So you want to protect your capital gain, right? So what do you do? What do you do, right? So the market is here, okay? You bought it here, investing one crore, okay? And the market is almost there, okay? So here is 1.2 crores of profit. Now you might expect the market can fall and you want to protect your capital where your break even of on a capital gain is this level. So you have to go something called insurances put option. Freshers, don't worry what is called put option. Okay, we will talk on that in detail. So for your understanding in a nutshell, okay, for example, let me put it over here. For example, the market like Wipro, okay. Wipro is dancing here, okay. It's around 400, okay. To 400 it went to 500, correct? Okay, anything in between going up market is called as call option on a nutshell, okay, and anything down below is called as put option. Make sense? Okay, on a nutshell, I'm saying. Now you want to protect your capital gain of 20,000. I'm just coming back to the topic, okay? So that is where you will use something called insurance. Okay, this word, remember this. Hedging is nothing but insurance, right? So you will use an option called put and you will protect your capital gain. You will not protect your 1 CR, your investment. Okay, no, you're protecting your 20 lakhs of your capital gain. So this is how the hedge funders, right? The big companies like investors companies they use called hedge funds. Make sense? Say yes in the comment box, guys. Make sense? So let's go with the live example so that we are all there. So let me rub this for you. I want to give you some stock where people they try to ping me with a good number of stocks. Guys, please understand this is very, very important because you might be starting a trade today with a small thing, okay? But tomorrow when you play big, right, it is very, very important for you people to understand what is what, correct? So that is the reason I'm trying to go a little slow on hedge funds, okay? You got the point? Let me grab some water, guys. All right, so thank you for being online. Okay, so now what happens? Let's take a Wipro, okay? I'm just giving you a live example, okay? Let's take an Wipro. How do you do percentage or how do you protect your capital or a capital gain? You can use for anything, okay? It's up to you. For example, take Wipro, okay? Say Wipro, you have invested, okay, and you're holding it in this level. I have two example. I can give you some more example also. So I want to give in a different scenarios, guys. Hold on, okay? Just understand what I'm trying to tell you so that it's easy for you. Let me go step by step, okay? Yes, sir, I'm getting your questions. Hold, hold, hold. After my completion, I will take all your questions. Okay, done deal. Perfect. Okay. Say, for example, okay, this is Wipro and this is a month of December, correct? So, market in December, okay, this is December. Where am I in December? Okay, this is December. December started in, okay, kind of a things, correct? This is where it started. So, let's keep it from ninth, okay? Because the market was dancing all the way, taking a good support, but due to no proper follow through. Okay, but it started tanking from this level. Okay, this level, the moment he broke this level, the sellers came aggressive. Okay, so I'm not talking about aggressive sellers, that we will cover up later part of it. So I'm just going on a nutshell. Okay, now you're holding your portfolio in this level, or for example, you have invested here. Okay, you have invested here where all the way the market went zoom, right? The market went all the zoom, which means, just an example, from 390 the market went all the way to around 416. So let's take around 25 points roughly. Yeah, so 25 points in the month of November you have invested and you're holding it, but due to some reason the market is falling down, right? But when you invested at 390, right, you made around 25 points. Big money, right? But you have something called, you want to protect at certain level, you want to protect your capital gain. I'm talking about capital gain right now. On 1 crore of your investment, you made 20 lakhs profit. How do you protect your 20 lakhs? That is the topic we are talking about. Make sense? Right? See, 390 you invested, it reached 416. Okay, but at at 400 or 405, okay, you are at 15 points profit, correct? 15 points profit. I'm talking about profit ratio. Okay, now below this you can't wait, you can't go under loss. So now how do I hedge the funds, right? How do I, excuse me guys, how do I hedge the funds? So basically what I do at this level, okay, I go to option chain. Okay, guys, in detail, I'll talk about it. I'm talking only about hedging. Okay, I'm talking about only hedging. I'm going step by step. So for the beginners, this looks like a rocket science, too many numbers, things like that. Don't break your head. See, this is the current market, 396 here, 396 Wipro, 396.35 is the current market. So the market was going high where you took, okay, at 390, and 405 was your cap, right? 405 was your cap. And what do? You want to trade, you want to hedge your fund. So what do you do? Basically, PE, okay, put option you need to make as an insurance, correct? So now I will choose one of the strike. For example, here I have taken 400. Okay, 400, 390, 400. I have taken. I'm just giving an example. So here what happened? Okay, market here it is trying to fall down. Okay, it went on top. So let me show it to you in two figures. Right, guys, keep your concentration in the left side of the graph. Okay, 390 was your investment here in the month of November. All the way it went to 415, 416. Correct? No confusion. Here, your break even, where you don't want to cover up, you don't want to go beyond this level, right? You want to stay in 15 points profit. So what do you do? This is your break point, right? Below this, you want to hedge it. Can you see the right side cursor? It is moving. Here the cursor, watch this, okay? On the same 8th and 9th December, okay? Here, the market is tanked. Market is falling from 406 to all the way to 389. But in the right side, from 5.55, it went all the way to 15.05. Anything changes, you see that. So anything market goes up, okay, it is CE. Market comes down, it calls it PE. Don't worry, we will talk about spot, how to choose a strike, what is put option, what is call option, everything in detail in the coming session. Say yes in the comment box, guys. Are you able to understand, right? Perfect, superb. Say yes, you need to be active. Okay, that is when I understand. Okay, yes, whatever I'm saying, it makes sense to you. Thank you. Thank you, Satish, for confirming. Okay, thank you, Shankar. Okay, so let's go. Let's go back. Okay. Now, how do you make money in this? Correct. That you should know. Right. So let me take here. I'm just using this. Okay. Now Wipro. Okay. Wipro. Now you saw in this level, Wipro is falling here. Okay. At 406. So I have taken that strike here. So now what I do, I need to buy. PE, correct? I need to buy the strike price of PE. How did I choose the strike? Okay, by going to the option chain of that particular, I'm sorry, here, of that particular stock. Okay, this is a spot, okay, of that particular stock. See, this Wipro has a variation of 400, 405, 410. Okay, this you need to keep in mind, guys. You need to trade according to the spot price only. Okay, not on the current market price, last traded price. No, on this price, spot price only, you have to trade. Now let's come back here. Okay, now what happens here? You need to buy, right? Say for example, I want to buy, break even is at 5.5. Now I'll go here. Okay, you're holding this stock, right? You're holding this stock of Wipro. Now market is falling here. You want to protect your capital gain, correct? So now what I'll do, I will go here. Guys, look over here very carefully, okay? In stock option, remember this, in stock option, there is no single equity like equity. It is a lot size. Remember this. Each like Wipro, Ultra, or ICICI, everything as in lot size when it comes to future and options. Okay, we will study future in detail in the coming session. Now, if you see, I want to buy at, okay, one lot is how much? 1,000. Can you see? Yes, 1,000. One lot is 1,000. Two lot is 2,000. Now, for example, okay, I want to buy this at market limit price, okay, at 5 rupees, 5.5. Why 5.5, guys? Because my break even, okay, here it is breaking. I have chosen this 5.5. I'm just putting 5.5, okay. Now, how much you're investing? 5,520. If you want, you can increase your lot size. The margin required, it will multiply according to that, right? Now, what happened? The market, it moved all the way. Here you can see some losses, right? But when you are hedging your fund, when you are in the process of protecting your capital, you're using as an insurance on put options, right? So from 5.5, it all the way went to 15. Okay, so I'm just taking an example, which means we made around 10 points, correct? Make sense? So let me take of 10 points. So in 10 points, you have made 10,000 rupees in two lots with an investment of 11,000. You would have made 20,000 rupees. Say yes in the comment box. What I'm saying, you're able to understand, right? This is called hedging. Make sense? Yes? Superb. Sounds like magic, right? Guys, basically all the blue chip companies and investment companies or people who take money from others, how do they play around? This is how they play around. This is the magic trick they use. This is a reason it's very important if you're investors in short term or long term. Basically, you should know what is called option trading. If you don't know what is called option trading, if you don't know how to play around, you cannot be a successful investor. This is why I want to cover up hedging today, right? So now if you can see here, okay, what we did, a quick recap. Okay, yes sir, a quick recap. I'll do it. Okay, see, for example, the market, okay, the Wipro, what happened? I'm just going back a little bit, a quick recap. Okay, I'm just taking a monthly session. Okay, so for example, you have invested at 390, the market went all the way to 415, 418. Okay, now what happened? You have a break even. Okay, break even at this level where from 490, sorry, 390 till 405, you made a good money, but some benchmark beyond that I cannot go under losses. Correct? Everybody has that, right? So you make a cap of 405 or 407, whatever, based on your risk and rewards, right? Now, at how do you protect your hedge funds? How do you protect your capital gain? Okay, so that is where you go to the option chain here. Okay, option chain here, and you look for PE option. because CE you're already holding as an investment. Now you will go for PE, and then you will choose the closest strike, that is called 5.5. That is 40. This is 1 month, guys. And remember one thing, okay? Equity, okay? Equity futures ends every last Thursday of the month. For this December, 29th is the last Thursday. So that's the reason you can see 29th December. So remember this point, okay? So from this level, you're still holding this, okay? If you want, you can exit. It's up to your, uh, uh, the strategy or the way you're dealing with your investment. But at this point, you want to protect the capital gain, so you invest on 5.5 or 5 rupees. This is the break point. Exactly, it's falling here, right? So how to identify this downfall? I had a question. Okay, don't worry. That also I will teach you how to figure out. Okay, let's go step by step, right? This is a point 5.5. You buy your stock options. Okay, you 5.5. You buy according to the lot size. Remember this lot size, maybe one lot or two lot or three lot. It's up to you. 21,000, right? So the market moved all the way to 15 points. Maybe you want to go for 8 points, 10 points is up to you, right? So now if you see, if you have taken three lots for 10 points, you would have made 30,000 rupees. Make sense? Now you can calculate if you're holding 1,000 shares here of Wipro, okay, from from 4 point, that is 418, it came all the way to 405, around 13 points, okay, which you would have lost 13,000, 13,000. Here, by hedging your funds, okay, by using the process called hedging or a strategy, okay, you made 30,000 and you're out on the deal, because this is monthly returns, because this is a monthly investment. Every Thursday of the month, last Thursday of the month, it gets expired. Say yes in the comment box, guys. This is how you protect your capital gain. Say yes in the comment box. Makes sense, right? Interesting. Okay, yes, 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 too good. Okay, super. Now I'll take one more example, okay? One more example. So let me go with Ultra Samco, okay? In Ultra Samco, what happened? See, this is one more scenario, okay? This is one more scenario where I'm trying to do this. You can do it for intraday, okay? You can do it for short term or long term or anything as such, right? In Ultra, okay, I'll just call it as Ultra, okay. So here, what happened in November? You have invested, okay, 6,940. I know it is a big investment. Yes, you can play around using different process called futures also. I will teach you that also, where you will minimize your investment and maximize your profit. Okay, there is a different ways to play, guys, in stock market. All is that you need to know the art of playing and making decision. That is why I called, in the first session with you all, trading is a management, okay, taking decision wise, okay. Now in this zone, okay, in this zone, what happened? Perfect, right? You have invested, you are playing here. This you can use it for your intraday also, where you're watching. This became a very good support zone, correct? Let me draw the line here, okay. This became a very good support zone, because market, the moment it went here, okay, it became a short selling here. The market was all the way it was going, short selling happened again. It broke, the bias came in from 155, all the way it went to 300, which means around close to 140, 145 points, the big number, right? Now what happens, I'm using 15 minutes time frame, right? The market again came down, it took this support, okay, but there was no follow through. This happened, this acted as a good support zone, right? Again it went back. You see here, market rotated in this zone again, right? The market almost is like a sideways. Now you know this is a very good support zone, don't you think so? 7115 is a very good support zone, don't you think so? Right? In this case, what happened? Right? In this case, what happened? The moment it broke 155, The market all the way it came down to what level? From 155, almost 50 points, right? Almost 50 points it fell down, right? So this is a big trade for a intraday guys who are doing in stock option, right? Initially, we saw how to protect your capital gain. Here, in case if you are invested here, okay, how to protect your capital also, or you can do intraday. It's up to you. In this ultra, I'm trying to teach you how to protect your capital, okay, and to play around in intraday also, right? So 155 was a very good support all the way you saw from 1st of December, almost like 12 days it was dancing here. It was sideways, and then the moment he broke for 50 points. It's a big trade for a intraday guys. And here what happened? Again, the trend continued, okay, and it went all the way another some more points like 6974, right? Now what I will do with this level, let me show you here, okay? Let me show to you here. Okay, where is that graph? Okay, guys, look at this. Look at this. Okay, here 155, it broke the support zone all the way. It went to what level? 6969. Okay, but here in the put option, people who know to make smart money. Okay, I would say trading is a smart money. Okay, all the way from here. Okay, all the way from here. Okay, let me draw a line for you all the way from here. Okay, he went to what level? What level, guys? From this is a break point. Okay, this is a break point here from 175. Let me keep it as 175 at this week also. Okay, 175 all the way he went to 242. Maybe I will take it as 50 points. Okay, 175 to 242. Okay, now, if I want to play around and buy this, how do I do? See, I put December Ultra 29th, that is the last Thursday of the month. The contract ends. Remember, in the beginning session, equity is a monthly expiry, and that expires on the last Thursday of the month. In case if Thursday is a holiday, the expiry will be preponed for Wednesday. Okay, that's very important to remember as a trader. Now, I want to buy this. I want to buy this. So how much is a quantity, guys? 100 is a quantity. In Wipro, it was 1000. See, it varies. Okay, remember this. It varies. The lot size varies. So here what happens? The investment is 16,000, right? Now, if I want, I can increase the lot size to whatever based on my capital. Now let me show you something a magic here. Okay, so what happened here from okay, I've used a different one. So it went from 175 minus 175, maybe like 242, right? 242, we got 67 points. Okay, 67 points into 100, how much we would have made? 6,700, correct? Now how much we invested? 16,000. Don't you think it's a good gain? Good gain with an investment of 16,000, right? Correct, makes sense. People who are holding in Ultra, okay, who are holding, maybe they invested in this level, okay, they went all the way where it returned, right? People who know analysis, right? They can understand what I'm trying to tell. Or freshers, don't worry, you will learn how to analyze these kind of graphs in the coming days. I will teach you step by step. Say yes, give a thumbs up. Is the session boring, guys? Exciting? Yes. Superb. Learning. I need the recording. Yes, yes. Recording will be shared to you. Okay, this is the place where the market moved all the way. If you see, this is upside, but this is downside. This is the process we use for hedging. Basically, what happens? The big companies like blue chip companies or DII or FII or EII or the small investors who are owning a capital of 10 lakhs, 20 lakhs, 30 lakhs or 1 crore, 2 crore, they use this kind of a trick either to protect their investment, their capital, or to protect their capital gain, right? Make sense, guys? Sounds good. Any question on this? Let me know. Let me know. Interesting, right? The topics are interesting. Okay, superb, superb, superb. So right now we have covered up what is called hedging. Okay, as a quick recap, hedging works as a insurance, okay, for your investment. Okay, so that is how we use this hedge funds. Okay, so as the days goes, we will talk about this in the live market also. Today I couldn't do it, but I gave the trade, and people who made 6,000, 7,000, and trying to recover your investment for the course, I'm very happy for them. Okay, don't worry, in this entire month you will recover all your money. Make sense? All right, guys. Any question you can ping me or in WhatsApp. Try to ping me in Telegram at iGrow Traders because Telegram has been installed in my system. I'm active throughout the session. Okay, I can reply to you, and or the email also would do. Anything as such, right? So please go through this recording once again, people who did not understand, and for the beginners, right? So any questions, you drop me a message, either email or WhatsApp or Telegram, right? So we'll catch up tomorrow. We will learn what is speculation. That is also one important topic, very, very interest topic. Okay. There you will learn how to make money when the market goes up, goes down, even in the sideways. Very interesting topic that is. So we will learn what is called speculation in detail as we went through on hedge funds. Right? Makes sense? Right? Makes sense, right? So we will do that cover up from tomorrow. Today we learned basics of options. Okay, we learned from the scratch, right? And when it started, important dates, and what is option. And don't worry about the call and put option, everything spot. I will walk you through in the coming days. And people who have any doubts on the hedge funds, very, very important. Okay, drop me a message. So we'll catch up tomorrow, and we will learn on speculation, which is my favorite subject. Okay, make sense, guys? Say yes in the comment box. That's what I call it as happy learning. Give one smile, right? You need to give one smile. Yes, sir. Interesting, right? So, any questions, guys? You can stop me anytime. Okay, this is the first session. Okay, I don't want to be a rushy. I want you to understand step by step. That's the reason I went very slow. Okay, so any questions, you can drop me a message in the live chat. Okay, I will take the questions immediately, right? So tomorrow I'll take you through speculation, which is one of the important topic to trade in the stock market, right? Okay, till then, take care. And tomorrow I'll see you live at 9 o'clock. And people who how to log into the live session, right? Don't wait for my link, guys. Okay, because too many things I have to do to prepare for a live call, right? So log into iGrow Traders. Okay, go to your courses. You will see in your store. Okay, you need to use your login ID and password. In case if your password is mismatch or you forgot something, you drop me a message, or you can go for a forgot password and you can reset your password and log in by 9 o'clock. Okay, so we will start the session by 9:05. Okay, I just want you to understand how the live market works, and you should be in the position to recover your investment, right? I don't have a login ID and password. Hanu, don't worry. I will share that with you. Okay, I'll share it by tomorrow by max before 8:45, right? I'll share that through WhatsApp, right? So we'll catch up tomorrow. Till then, happy learning. Enjoy your rest of your evening. We'll catch up morning live. Take care. Have fun. Bye bye. Thank you. Bye bye.